Hello traders, hope you're doing well. Nowadays in stock market, every day has become an expiry day, right? On Tuesday we have Fin Nifty expiry, Wednesday Bank Nifty expiry, Thursday Nifty expiry, and Friday Sensex expiry. So every day has become an expiry day for us. As an option buyer, if you do not choose the correct strike price for your trade, especially on these expiry days, then the chances of you making loss, even if your view is correct, is very high. So in this video, I'm going to teach you a very simple but powerful method of choosing the strike price for your trade. Especially if you're an option buyer, it's going to be very useful for you. Recently, in our free Telegram channel, I conducted a poll. In that, majority of the people are option buyers. They're trading in any one of these index. And also I noticed that people are beginners and intermediate. If you fall under this category, then definitely you have to watch this video without skipping. I'll just take 10 minutes of your time to explain this concept. Once you understand this concept, definitely throughout your trading journey, you can use this. Alright, so without further delay, let's begin with today's video.
Now traders, if you are an option buyer, what is very important? It is important for us to identify the trend of the market. It can be based on price action, it can be based on stop loss hunting, or any other method which suits you. But identifying a trend is very important. Only if you are able to guess the direction of the market, you will be able to choose the correct strike price for your trade.
Now traders, if you're finding it difficult to understand the sentiment of the market, or you're not able to guess the trend of the market, then I highly recommend you to follow our YouTube channel, because from 1st of January you can see we have resumed posting daily market analysis video. In this we discuss about high quality trading setup for Nifty, Bank Nifty and Fin Nifty. Now sometimes the sentiment of the market can change, right? That is why in our free Telegram channel we also share pre-market report, where we will also take into consideration of any important global news which happened overnight. Okay, all of these things will be really helpful at the beginning stage for you to develop your chart reading skills. So don't forget to subscribe to the channel. Now let's go back to the video.
Traders, now let's quickly try to analyze the trend of this chart. Now what I can see here is continuously this level was acting as a good resistance level for Fin Nifty, and Fin Nifty gave a breakout. I feel that it tried to trap people who entered sell position at this resistance. After this, we can see that there has been a reversal. Next thing I can observe here is the market has created a pool and then it is trying to create a flag. As per price action, the market is supposed to move towards the upside because it's a bullish flag pattern. This is the first analysis we did. Now the second analysis. Continuously many people are considering this level as resistance. That means the seller stop loss might be available on top. So bullish flag pattern is saying that we can expect a breakout, and stop loss hunting is saying that the market can move towards the upside. So based on this, let's say I had a bullish view about the market. Now when we are trading in the futures market, we can just go to the current month expiry. There we can enter a buy position. But many retail traders do not trade in future market because it is expensive. They want to trade in option. In option buying, capital requirement is very less. So let's say a retail trader decided to buy a call option. Traders, here you can see Fin Nifty is currently trading at 21,442. Now exactly at this level we cannot enter. When we're trading an option, we need to choose a strike price. Now if my view is bullish, what do? I enter a call option. But there are so many strike prices. Which strike price should I choose? Now the closest strike price to the current market price is 21,450. Now it is trading at 27 rupees. Now especially on expiry day, we understand that only when we have quick momentum we can make decent profit in the market. And also we know that market can be very volatile during expiry day. Now 21,450 for both call option and put option, it is at the money strike price because it is near current market price. Since our view is bullish, is it right for us to choose 21,450 strike price and make decent profit in the market? Now let's try to understand this. Now since many of you who's watching this video, you're a beginner, I will try to explain this concept to you as simple as possible. The first thing what you need to do is the strike price which you want to choose. In this case 21,450. You need to add the strike price amount with the premium amount. So in this case, 21,450 plus what is the current price? Let's keep it 25. 25. The total comes up to 21,475. But where is Nifty currently trading at? It is trading at 21,434. But here, if you add the premium plus the strike price, it is coming up to 21,475. This means simply what you need to understand is if you choose the strike price for your entry, Nifty goes to 21,475. That is when you will be seeing profits in the market. 21,475 minus the current market price 21,435. So this is close to 40 points. So if market moves by 40 points, especially on this expiry day, only after this 40 points momentum, you will start seeing some decent profit in the market. Now you tell me, at this current market sentiment, the market has to move 40 points. Only after that, if you're starting to see profit, is this the right strike price for you to choose? Even if you're trying to make 10 to 15 points profit, then the market from the current level, it has to move more than 55 points. So when you're doing the analysis, it is very important that you have a view about the market. Will it break this level and will it continue towards the upside, and will it move more than 55 points for you to make 10 to 15 points profit? This is something you need to validate before you choose the strike price. Now since today is expiry day and market is not yet reached 21,450, majority of the premium that you are paying is only for the time value. So at this point of time, choosing an at the money strike price is not good for you as long as you are very confident that the market will continuously move towards the upside more than 40 points. Along with that, it is going to give you 20 to 25 points return. Now one more thing that you need to pay attention to when you're choosing a strike price is the delta value. For the current strike price, delta is 0.5. This means if the spot chart moves by 10 points, the premium of the strike price which you have chosen, it will move by 5 points. At the money, out of the money, strike prices will always be trading at a lower delta value. The more out of the money you go, so the chances of market, even if it is going as per your direction, the chances of you making profit will significantly reduce as you keep choosing out of the money strike price. Now instead of this, let's say you chose a strike price which has a delta value of close to 8 or 9. Now what does this mean? This means that from the current level, if Nifty moves up even by 10 points, this particular in the money premium will move up by 9 points. This one will move up by 8 points. Now the same scenario let's consider when we choose an in the money strike price. In this case, let's say instead of choosing this, I chose an in the money strike price which is 21,300, which has a delta value of 0.9. Now it is of course trading at a higher premium compared to this. Now let's try to understand if you choose the strike price, from when you will start making profit. For that, what you need to do, this strike price 21,300, with that you add it with 155. So 21,300 plus 155. It comes close to 21,455. At what price Nifty is trading? It is trading at 21,445. So if you choose the strike price and from the current level, even if market starts moving up just by 10 points, and when the market moves as per your direction, you will quickly start seeing profits in the market. That is the main reason why in the money call options, which is highlighted in all these are in the money options, are trading at a higher premium compared to at the money and out of the money strike price. Many retail traders, what they do is instead of choosing in the money strike price or at the money strike price, they go and choose, especially on expiry day, out of the money strike price they choose. A strike price which is trading at 9 rupees or 4 rupees they go and choose. Now just add these two. In case you choose this strike price out of the money, 21,550 plus 4. So 21,554 is the total when you add these two, right? If you choose this strike price, you will start making profit only when Nifty goes to 21,554. After reaching this, still it has to keep moving. Only then you will start to see profits. You would see many traders saying that if you had bought a 3 rupees call option or 10 rupee call option, it gave a return of 1000%. All these things happens rarely, and I completely feel that is gamble. So the chances of you turning into profit is very high when you choose an in the money strike price, even though it is trading at a higher premium. The higher premium you're paying because the chances of you achieving the target from the current market level, even with a slight momentum, you will start seeing profit quickly when you choose these strike prices. Whatever I explained about FinNifty, same thing is applicable for Bank Nifty, Nifty, or any other index that you're trading. Here in this video, I did not discuss too much about the time value or other things because I have already made 30-minute dedicated video about how to choose the correct strike price. In that step by step, I have explained all the concepts. So I would suggest you to go and check out that video because I'm very confident it is going to give you additional knowledge from what you learned in this video. Traders, till now we have discussed about call option side. What have we understood? If our view is bullish, choosing an in the money strike price is better, especially which has a higher delta value. Out of the money strike price, if we choose, even if market goes as per our direction, the chances of profit that we make will be very less. Surprise momentum as per your direction, that is when you will see profit. That happens in rare occasion. On 9th of January, momentum would have happened, but will it happen every day? No, right? That is why to be safe, we choose in the money strike price. Now let me quickly discuss about put option side also. When do we buy a put option? When we think market will fall from the current level. Now when we have a bearish view, which strike price should we choose? Here also we will choose in the money strike price. Let's say I consider 21,600 strike price. I have to minus this with the last traded price. 21,600 minus 152. So here it says 21,448. Where is the market currently at? It is at 21,445. Choosing the strike price would be really better because FinNifty is already trading below 21,448. There is a 3 points difference. So if you choose the strike price, if market even a bit, if it starts falling, here only you will start seeing profits. Now if you choose 21,450, you minus this by 27. 21,450 minus 27. So it is 21,423. So from 21,445, if the market starts going below 21,423, that is when you will start seeing some decent profit in the market. In case the market goes sideways, especially on expiry day, because of time decay, for you to achieve the target will be very difficult. Out of the money, let's not even talk about it. We need very big momentum here. So the bottom line is, you're trading on the call option side or put option side, always make sure you choose in the money strike prices, which is trading at a higher delta value. Only if you are very confident about the market, you can choose at the money or out of the money strike prices. Alright, this is what we have understood. Traders, before I close this video, I thought of discussing some key important points which you need to take into consideration. The first thing is, as an option buyer, you should be able to predict the direction of the market. Now from the current level, before entering the trade, you should be able to guess, will FinNifty move towards the upside or downside? Without understanding the direction of the market, it doesn't matter even if you choose an in the money strike price, you will end up in loss. So understanding the sentiment of the market becomes very important. To learn this concept, you can start following price action, or you can follow stop loss hunting, or any other concept. It doesn't matter. Your strategy has to give you understanding about the direction of the market. Once you understand this, the next thing is you will choose a strike price. It would be better when you go for in the money strike price, which has a delta value of 9, 8 at least. So that even if market moves as per your direction little bit, you will start seeing decent gains. While choosing in the money strike price, even if market stays within a range, compared to out of the money, you will not lose that much. Don't get scared about in the money strike prices trading at higher premium. This higher premium that you're paying is an advantage for you during the market. This is where you will be able to achieve your target quicker. Now the next important thing as an option buyer is you plan your exit accordingly. Do not hold your position until 3 o'clock, especially when you have chosen in the money strike price. On the expiry days, in the money strike price, many people would have exited. At the money, out of the money strike price, only their people will be available. If you do not close your position by 3 o'clock, your broker might automatically square off your position, but for that they're going to put you some charges and penalty. To avoid that, try your best to close your trade before 3 o'clock. During this time the market will be very volatile. My personal suggestion is close your trade before 1 o'clock or 2 o'clock. After that, the market slowly gets volatile on expiry day. Now these are some of the points which I want you to take into consideration to get better results as an option buyer. Traders, now only theoretically we have discussed about the concept of how to choose the best strike price for a trade. Now there is an assignment for you. You can log into any paper trading website. For those who do not know, maybe you can choose NeoStock. It's a paper trading platform. You can put live trades in the market. You can choose an at the money strike price, in the money strike price, and out of the money strike price based on the concept what we have discussed. You will only see the benefit of choosing in the money strike price compared to out of the money. Paper trading and testing the concept which we have discussed today is very crucial. At least paper trading in the live market using different strike prices and seeing the profit and loss. This is what will give you the real market results. These results is what will give you the confidence, and you will start choosing the correct strike price for your trade based on the situation. Traders, now we have come to the end of the video. I have tried my best to explain the concept of choosing the correct strike price for a trade, especially on expiry. From this video, even if one person is able to take better decision while choosing the strike price, I would consider the purpose of this video served. If you think you learned something new today and the time that you spent was worth it, then share your support by liking the video and subscribing to the channel. This would motivate us to do more videos like this. Thank you for watching. I'll see you in the next one.